If we fast forward 1 year from now, where are stocks going to end up? Are we going to have a green year? Are we going to have a red year? I have a lot of things in this video that I want to chat through that might indicate that we're going to have a strong year, especially in the main three indexes. There's definitely a few things that are worrisome. We got to chat through those as well, but I think the positives might outweigh the negatives in 2024. That's what we're going to get into in this video. If the first 3 trading days of the year, which is when I'm recording this video, the first 3 trading days have just wrapped up. We had 2 really rough red days and then 1 pretty decent green day. I'll probably release this after the 4th trading day of the year, so we'll see how that shakes out as well. But if that's any indication of how the year is, it looks like we're gonna have some big ups and some big downs. So we're gonna dive into this, but first, if you're new here, I'm Austin, I'm co-owner of cloudindustry.com. I'm also a stock market investor, okay? If you're new to the channel and you're not one of those 2,500 or so people, go ahead and click that subscribe button as a thank you for doing that. Here's a picture of some of my animals, my dog and my 2 cats. I appreciate you so much. Let's jump into the video. So first of all, this is an election year and we're coming off a very nice year in the indexes. 2023, looking at the indexes, was very positive. When we have a 20% year, the following year is almost always positive, with continued momentum of about 13% up the year after we had a 20% rise in the S&P 500. So before we move forward, quite a few things I'm going to talk about in this video are backwards looking, and I recognize, as much as the next guy, that past performance does not predict or indicate future performance in any way. But Wall Street knows these things as well. It's not just me that knows these things. Hedge fund managers understand what happened in the past, seasonally, in an election year, what typically happens after an up year, etc. They know these statistics as well. If they have an idea that the stock market is going to move higher in the first half of the year, in the second half of the year, it's probably going to move higher in the first half of the year, the second half of the year, because those guys are really what controls these stock prices. Me and you that's buying 10, 20, 30, 100, 200, 1,000 shares even at a time, that's not really moving the stock price. The dudes that are moving the stock price are buying tens of thousands of shares, hundreds of thousands of shares daily. I had to take my sweatshirt off. It's getting too hot in here talking about 2024 stocks. Anyway, so it's also an election year, right? 2024, we're going to have a presidential election, and normally presidential election years, check this out, 20 of the last 24 election years have been positive in the S&P 500 with an average return of 11.5%, and that's higher than the 9.8 average percent over the last nearly 100 years. So not only are we positive in a normal election cycle, but we're actually more positive than a regular year, okay? And this includes 2008, which we all know what happened in 2008 financial crisis, and it includes the year 2000 with the tech bubble crash. And it includes 1932, and we were still in like Great Depression times in 1932. So we take those 3 out, we are overwhelmingly, insanely positive on election years. Are we going to buck that trend? Who knows? But if we're looking at past performance, almost always we're positive in a pretty major way the year of an election. Another thing we have going for us is that inflation, not only the CPI, but also the core CPI, which strips out food and energy, are both going down and stabilizing at those lower year-over-year rises of around 3 to 3.5%. And what I believe is going to happen, the Fed has signaled to this, is that they're going to cut about 1% over the course of 2024, meaning we would have a real rate of 1%. About 3 months ago, maybe 2 months ago, I can't remember now, I made a video that said, I hope in 2024, first half, they're going to target a real rate of 1%. Would you look at that? Now it looks like they're targeting that real rate of 1%. If you haven't heard of real rate before, it's basically Fed funds rate minus CPI, which is inflation. So if we have a 4.5 Fed funds rate, which is about 1% lower than we are today, and we keep the 3.5 inflation, which is still pretty dang high, okay? Let's be clear. They want to be at 2%, they meaning the Fed, but anyway, 4.5 minus 3.5, that will give us a 1% real rate. If we have CPI drop to 3, I believe the Fed is going to want to drop Fed funds rate to 4. If we have CPI at 2% on a year-over-year basis, I believe Fed would bring the Fed funds rate down to 3%. That would always keep us at a 1% real rate. I believe that's what they're going to target in 2024. And not only would rates coming down be good for stocks in the medium term, because that means that debt is cheaper to take on and expanding the business through debt instruments would be cheaper, which is great for stocks in the medium to long term. It's also good for stocks in the short term. Check this out from Morningstar. After the first rate cut after a tightening cycle, tightening meaning making money harder to get, increasing rates, etc., reducing the balance sheet. After the tightening cycle, we see the first rate cut, stocks almost always go up over the next 6 to 7 months, with the S&P 500 seeing a mean gain of 12%. Over the entire easing cycle, stocks have seen a mean rise of about 21%, with a median of about 15.4%. That is also overwhelmingly positive. Another thing that I see coming with rate cuts is that the housing market will get at least in a mildly better spot. And if the housing market is in a mildly better spot, jobs numbers are also going to be in a mildly better spot. There's so many jobs wrapped up into the housing industry that if the housing market is strong, the job market is almost always strong as well. So that would be great as well. And that would mean that the Fed does not have any troubling jobs data to have to worry about while they're going through their rate cutting cycle. A couple of things that could be troubling. One that's not really troubling, but it is something to look out for. Normally in an election year, the first quarter of the year, meaning January, February, and March, is pretty much a downtrend for stocks on average looking in the past. But then the last 3 quarters of the year typically are very good in an election year. So that's one thing to think about. If you're looking to pick up shares at a certain time of year, potentially Q1 of 2024 could be that time for you. If you're a buyer every single week or every single month, no matter what, who cares, doesn't matter, but something to think about. Another thing is that there's still the conflict going on in the Middle East. If that accelerates in any major way, that could mean major pain for stocks. If we have a reacceleration of inflation, not only is that going to mean pain for stocks because the consumer is going to be in a worse spot, but it's also going to be in major pain because if we do see an uptick in inflation again, the chances that the Fed cuts rate drop by a significant margin, right? If we see an uptick in inflation, the Fed cutting is pretty much off the table. The only reason they're going to cut is to target that 1% real rate. And that would mean we need to stay somewhere in the 3s, mid 3s, low 3s on inflation, maybe even lower than that, so that they can bring that Fed funds rate to 4.5 or 4.25 or even 4%, dare I say. So it's not all sunshine and rainbows out there, but past data is indicating that we are probably going to have a pretty dang good 2024, if not a very good 2024. I think we'll probably see pretty much an average gain in the S&P 500 of about 10 to 12% over the course of the year. I think there's going to be massive ups and massive downs. I think Q1 could be a pretty large down cycle for us, especially in large caps. And then I think large caps will stabilize and kind of slowly climb higher throughout Q2, Q3, and Q4. But I think this year is going to be pretty dang big for small and mid cap stocks, and maybe even some unprofitable companies. I'm not saying to go out there and buy a bunch of unprofitable companies, but I do think this could be a better year for unprofitable companies than 2023 was. Companies that aren't profitable typically have more of a need to fund their operations through debt. The cheaper debt gets, the more people and investors are going to get excited about smalls and mids that are losing money or they're on the cusp of profitability. Some of the stocks that I think are going to be the biggest winners this year are those that are in the process of flipping the profitability corner. I think there's going to be a lot of flood of money into these almost profitable companies in Q1 and Q2. Then they're going to flip to profits in Q3, Q4, and the market's probably going to be in an uptrend cycle at that point too, which is just going to lead them even higher. A rising tide lifts all boats, and they'll have the feather in their cap of now being a profitable company on those EPS numbers, net income numbers, income from operations numbers, etc. So I think it's pretty clear at this point in the video that I believe we're probably going to have a really good 2024. Even if we don't have a good 2024, it is still possible to find some winners out there. There will still be stocks that are up massively, even if we have a flat market or a down market. I think the chances of a flat or down market are pretty low throughout 2024, but it's possible. But if we just keep on focusing on fundamentals, you're going to be in a good spot over the next 1 to 3 years regardless. If you're focusing on EPS numbers, expanding the net income numbers faster than we're expanding revenue, continually going after companies that are able to expand their revenue somewhere between 5 and 30%. Yes, that's a large range, but I don't want to get into all the different types of stocks we could look at. Some growth is going to do really well. Some value is going to do really well this year. Some dividends are going to do really well this year. Some turnaround plays are going to do really well this year. Some cyclical plays are going to do really well this year. I'm going to release a whole video on what stocks I'm watching heavily, what stocks I'm looking to buy at what times of year, how large I'm going to build those positions throughout 2024. I'm going to do a video on that. That'll be the next video I release after this one. So go ahead and subscribe so you don't miss that one. But in general, there's going to be winners no matter what. As long as we're focusing on fundamentals, we're focusing on the leader in their market or the number 2 or number 3 in their market, expanding their revenues, expanding their net income and their income from operations even more than that, as an indication that the business is becoming more efficient as we scale those revenue numbers up. That's what we're looking for here, okay? Companies that have built out a moat, that are not trading at ridiculously disgusting price to sales numbers, not trading at ridiculously disgusting forward PE, trailing PE numbers, right? Undervalued in relation to their peers, growing faster than their peers, more profitable than their peers, profit numbers are growing faster than their peers. Those are the stocks we're looking for. They exist out there. Keep on searching for them. My next video will be detailing some of those companies that I love for 2024. But for now, that's all I got for you. 2024, I believe, is going to be a very good year for stocks. Go out there and make some money. At very least, be an index fund investor if you don't want to pick individual stocks. Thank you so much for stopping by. I appreciate you for being here. Keep on investing. Have an amazing day.